Welcome to Fibocan's YouTube channel. You have done the right decision in your life by coming into Fibocan's YouTube channel. Who is Fibocan? Fibocan is a wealth enabler. How do we enable wealth? We enable wealth through training, coaching, mentoring, enabling students, investors to devise their own investment strategies through our comprehensive training programs and innovative investment strategies. So what do? We have published educational videos 1 to 16, module 1 to 16 in English and Tamil. The modules that start from basics of banking, capital market, investments, how to do investment, technical analysis, options, futures, then strategies of options and futures, and finally income tax on derivatives. To begin with, all these 16 modules are available both in English and Tamil. I would request you to go and select the appropriate playlist and watch all the videos and put your comments. So that is the step one. Every day we put videos about market commentaries. Please understand that we are not SEBI registered. Hence, we cannot give any recommendations. We will say whether it is looking good, technically sound, technically weak, has to be cautious. These kind of things we will give, but we will not give any price targets, or we will not give any stock recommendations. Only thing is that we are here to give technical education, imparting technical knowledge to anyone and everyone through our free educational videos, which we put every day on the daily markets, and during weekends we put about global markets. So I would request and encourage anyone in the age group of 17, 18, those who are studying in HSC, higher secondary or plus 2, to watch module 1 to 4, definitely either in English or Tamil, whichever language you understand out of these two languages. And anybody who is doing BA, BCom should watch up to module 8. And those who are doing MBA, CA, CFA or any professional or postgraduates should watch up to module 15. And for professional traders, it is ideally suited for them to watch module 16. I am sure that you will enjoy watching and enhancing your knowledge. Thank you very much. Today is February 4, 2024, Sunday. As always, in the weekends, we put global market videos. As you know, we put the global markets into 3 parts. Part 1 of the video will have the indices, that is Dow, Nasdaq, S&P, FTSE and CBOE weeks. And in part 2, we cover dollar index and its components. Part 3 of the video is basically US 10-year treasury yield, then Brent and NYMEX. That is how we cover. Before that, since Wednesday we were not putting video. The reason being, as I said on Wednesday itself, that my health was not good and hence we had to go to doctor, and we were almost in the bedridden, you can call. Basically, we were just lying down in the bed, so we couldn't move out. So that's why we were not able to put the video. Nevertheless, today we are putting the global markets. So in this video, what we'll be discussing is the market performance for the month of January and also how it fared in the 2 trading sessions of February, right? That is what we will see. So first the levels, Dow closed the month of January at 38,150.30, Nasdaq 15,164.01 and S&P at 4848.01, then FTSE at 7630.57. Everything moved up by 1% or so, FTSE down 1.3%. Of course, in the 2 days of February, market moved up significantly. That's a separate thing we will discuss later, but how the month performed. See, overall what happened, we have been telling that it is on a significant up move. In fact, last week's video, I would request people to see where we have told very clearly that market will close above the Bollinger Upper Band in the monthly chart. Precisely that is where it has closed. It is significant up move. It is riding along the Bollinger Upper Band. So it's like what you call some wrench or something going in height, and we catch it and we keep going along with that. It's a delight to watch, and one can hold the long position as long as the upper band, the price is touching and riding along the upper band. That's a very good up move. That is what Nasdaq, S&P and Dow, all three indices are. In the monthly chart, as I said, right, it is on a significant up move. Third month in succession, it had formed a green candle. And in the first 2 days of February, of course, it formed a green candle. February is a different story, we will see later. But 3 months, it is significant up move. In the weekly chart this week, we will cover the weekly also. It is on a significant up move by forming a solid green candle in the weekly. That is how it has formed. In daily also, it is significantly riding along the Bollinger Upper Band. This is the case for all the three indices, that is Dow, S&P and Nasdaq. Of course, the strongest of the three, I would call it as Dow. In the entire process, Dow, Nasdaq and S&P is significantly above all the moving averages and all the exponential moving averages in all time frames. So, which is something noteworthy to watch. FTSE on the other hand, FTSE is, if you recollect, I had said that last week itself it formed a solid red candle, but it has formed a slightly bigger lower leg, which what it tells? The long lower leg tells very clearly that at lower level there is lot of buying support that is happening. In the month it closed by forming a bearish harami type candle with a long lower leg. That tells that there is a strong undercurrent for FTSE at the lower levels. And if you recollect, I have been telling that FTSE is going to be 2024 is going to be a year of FTSE, which we will see FTSE going up significantly. So the tone is set for that. In the weekly chart, FTSE last week it had formed a solid green candle, bullish engulf. This week it followed up by forming a red candle, but basically it is a slight pullback candle. The pullback is for to move up with much more force. That is how FTSE is formed. CBOE weeks on the other hand, if you recollect, I have been telling that it is hovering at around the 13.2 levels, 13.85 this month it closed, and it formed a small spinning top, but it is forming a rounding bottom. So basically what it means, when it forms a rounding bottom, it means that the downward move is downward pressure is very less and it is consolidating at this level. That is what is happening, which it demonstrated once again in the weekly chart also, where it is not going below the Bollinger lower bands, and the level of 10.9 to 11.2 is acting as a fantastic support. So overall, the market is on a significant up move, but because it is going above the Bollinger upper band, the plus and minus, particularly Dow, Nasdaq and S&P is plus and minus is one can hold long position as long as it is riding along the Bollinger band and the exponential moving averages are not broken down. But the downside risk is that if there is a fall that will happen, easily a 3 to 5% fall can happen in the month of February. Hence, no one has to be very careful at this level, but that undertone is strongly bullish. Thank you very much. We will see in part 2.